Hi, welcome to the world of Acumen. We are your personal finance and investment educators. Before proceeding, please ensure that you have downloaded and printed your own copy of the timeline along with a pen and calculator. So what does this actually mean? Let's start with you and your personal estate. At some point in your life, you will require the services of a financial planner. Many people think they need to possess lots of money to get value of these services, but that's not true, and we can educate on why. A finance broker who will aim to get you a better deal on any loan, and we will educate you on how. A real estate professional, whether you are investing or purchasing to live in. An accountant for anything to do with taxation, and a solicitor for any property purchases or other legal advice. The aim is to have these professionals communicating to ensure effective growth of your personal estate, and we can educate you on how to do this. The iceberg theory. The part of the iceberg that sits under the water is usually 3 to 4 times larger than that of the size of what's visible above water, hence the term tip of the iceberg. The key to the iceberg's success and growth is in its foundations under the water, and if that's not strong, when a storm hits, as we also hit financial storms, the iceberg will crumble. In relation to your finances, if you do not educate yourself financially, it doesn't matter how much money you earn, chances are your estate will crumble. Our role at Acumen is to assist you to develop a strong foundation so that you can achieve growth financially and weather any financial storms. The timeline. Let's use Bob and Mary as our example. Bob is 45, Mary is 40, and they have 2 kids. Bob works full-time and Mary is the caregiver. The government is going to tell Bob and Mary that they can retire at age 65 currently, if they are lucky. The government also tells us that 93% of Australians will not have enough super to retire on and will be forced to rely on the government pension, and you will see why shortly. Let's assume that we need to provide for 20 years in retirement. Bob and Mary currently have only $130,000 combined in super. Most people, including Bob and Mary, require $50,000 per year or $1 million total in retirement to merely live comfortably, which is a huge gap between $1 million and $130,000. How much do you need in your retirement? Let's take a step back. Bob currently earns $100,000 before tax per year. Out of his $100,000, he pays $20,000 to the taxman. So with 20 years of working life left, Bob will make $2 million. Out of that $2 million, he will pay $400,000 to the taxman, which means Bob will work for 2 to 3 years of the 20 years just to pay his tax. How much tax will you pay over the next 20 years? Take a moment to calculate. Bob and Mary also have a mortgage on a house they live in. The value is $520,000 and they owe $302,000. They are paying principal and interest at 5%, making their repayments $2,123 per month, with 18 years left on the term of the loan. This means they will end up paying to the bank $458,500 for a house they only owe $302,000 on. That's a whopping $156,000 more than they should be. So let's see what these figures mean for Bob and Mary. We know Bob is going to earn $2 million over the next 20 years. But out of that, he is going to pay $400,000 to the taxman and $458,000 to the bank. This leaves Bob and Mary with a total of $1.14 million to live off for the next 20 years and put 1 million into super? The numbers just don't add up, do they? Do yours? And that is exactly why 93% of Australians have to retire on the government pension. If you're watching this and wondering what your personal estate is doing for your financial future, here are some questions to ask yourself. Number 1, do I pay a lot of tax? Number 2, do I want to pay off my mortgage quicker? Number 3, do I need some assistance to ensure I will have enough to retire on? If you answered yes to any of these questions, we suggest you complete the box below so we can assist you to map out your own timeline.